Hello there. Welcome to the presentation of how doctors lose six figures to taxes and what their CPAs are telling them. Most physicians earn more every year, but still don't have a tax plan built for physician income. This session is going to show you where the money quietly disappeared to. I want you to take a step back. You spent a decade becoming a doctor. You sacrificed your 20s. You went through residency, fellowship, and boards. You built a career that most people can only imagine. And every April, the IRS collects like they were your silent business partner the whole time. I want you to think about that. The average physician overpays $40,000 to $80,000 every year to the IRS, not because of what they earn, but because of a lack of a tax plan. You've healed thousands of patients, but who's been healing your tax bill? The gap between a physician's income and a physician tax plan is where six figures quietly disappears. This is the conversation your residency program never had, and it's the one that could change your financial trajectory permanently. Most CPAs just file your tax returns and you see them the following year. That is tax preparation. What that does is it reports history. A physician tax plan looks forward and changes the outcome before December 31st. That's something most physicians have never done before. And here's the hard truth that nobody told you about in medical school. And these are three important things. Your 1099 income is taxed at the highest personal federal tax rate. And that's because you don't have a tax entity around that. So every time you get paid, you're losing close to 15.3% of self-employment income tax taken out your paycheck. And when you think about that, you're leaving close to $60,000 to $200,000 of pre-tax savings, whether it's having the right retirement vehicle, whether it's a SEP IRA or cash balance plan. That is something you have to consider, and most physicians have never opened one. And lastly, number three, your CPA files your tax return in April, meaning that every window to reduce your tax bill has already been closed. I want you guys to know who's behind this. My name is Busayo Ogunsanya. I've been a CPA for close to 18 years. I have a master's in taxation from Fordham University. I've saved my clients close to over $100 million in tax savings. I've also written eight best-selling tax books. Before owning my own CPA firm, I worked at Ernst & Young, JP Morgan, and JP Morgan. And I want you guys to see my actual credentials. On the left is my New York State CPA license. License number is 10562. And on the right is my master's in taxation from Fordham University. We both spent years earning these credentials. You spent your years earning your medical practice license, and I spent mine earning my CPA license. And the reason I'm showing you guys this, I want you guys to see my credentials, and which allows me to do my work with precision and holds me accountable. And this is the core idea. A lot of medical professionals think about tax preparation as a one-time item. Tax prep it looks backwards, while tax plan looks forward. Tax prep shows you what has already happened already. It's usually after the year is closed, and there's nothing to unlock that decision. Pretty much, all you get is a tax bill and an invoice, and there's no tax plan. With tax planning, we like to call it as the windshield approach, meaning that it looks forward before year end. What we're doing is we're changing the outcome while there is still some time. We're also coordinating entity changes, retirement, and also helping you out with retirement. And the one thing I want you guys to really understand is we're helping you put money back in your hands. This is what we do, and this changes the number. So to recap this, tax preparation is more of the rearview mirror approach, while tax plan is more looking forward, which is the windshield approach. Most physicians pay for tax preparation. A small number pay for planning. The difference between those groups is measured in tens of thousands of dollars every single year. So what I'm going to walk through you guys is a real case study of a couple of medical practice owners that we work with. I like to make things concrete. So we had an attending physician that came to work with us, and they had a combined income of close to $485,000 a year in terms of W-2 salary, and also shifts as a 10-9 at a local hospital in the area. Also, they didn't have a tax end in place. They had no plan, to be honest, and they never did a year-end projections ever. So when you think about this is a major problem, and I'm gonna walk you guys through what we did. So in terms of what we did, we helped them with making sure they had the right the LLC, which is a PLC, because you're a professional doctor. Also, we helped them with taking out the S corp election. to help and also set up a defined benefit plan, which allowed us to put close to $180,000 in terms of the retirement vehicle. And also, we updated the W-4 with their withholdings. And the result is we helped them save close to $52,000 in year one. And this is from a physician who thought they were doing everything right. I want you guys to really take a screenshot of this page and understand there's different items that you have to consider as you scale your business. So when you think about that number, $52,000, what I really think about is the long-term approach. In 10 years, with a defined benefit plan maxed out, that's close to $1.5 to $2.5 million compounded with tax advantages instead of giving that to the IRS. That's your retirement, or that could be your vacation home. That could be for financial independence. Physicians who plan correctly reach financial independence with decades earlier than those who just pick up more shifts. And also, lastly, that could lead to more family security. Every dollar not lost to avoidable taxes could be a 529 plan for your children. It could be an emergency fund, or it could give you a head start for your kids. Tax savings for physicians aren't just about April 15th. They're about what happens over the next 20 years. So as a CPA with a master's in tax, one thing I've noticed is 4 patterns. And then what I'm going to walk you through are very, very crucial. And right now, we're going to discuss pattern 1. A physician comes to us without the right tax structure. And there's so much tax leakage that this client goes through. Whether it's W-2, 1099, partnership K-1s, moonlight in different hospitals or different physician centers, most physicians have 2 or 3 income types and one tax strategy that wasn't designed for any of them. And when you think about this, assume this physician is making $450,000 a year. The cost of this misalignment annually is between $40,000 to $80,000 a year. This isn't a complicated fix. Is due to a plan that was never built and never been put in place. Pattern number 2 that we've realized. Most physicians leave close to $60,000 to $200,000 of pre-tax saves on the table every year. For example, some have never considered a solo 401k or a SEP IRA. This is something that you have to consider in terms of understanding your different benefits. Pattern number 3, timing. The calendar is the one thing nobody can amend. For example, you could set up a defined benefit plan, have various entity changes, partnership income timing. The strongest moves happen before December 31st. In April, your CPA already has filed what has happened, but throughout the year, you must be doing tax planning. They cannot undo what you didn't decide in October. And every year without a projection is a year every window closes untouched. Pattern number 4, plan and rhythm. You wouldn't manage a patient without a treatment plan. But seriously, why manage your money? Why do you manage your money that way? Assume that you have a physician make $100,000 to $250,000 in physician income. 1 year is not enough. What you really need to do is do a quarterly review, an income review, estimated tax checks, retirement right sizing, entity review, and your projections. Your physician, your medical professional, your goal is to focus on medicine. Yeah, and with our skill sets, our goal is to help you focus on handling your financial tax future. So here's what I'm offering: the physician tax strategy. This is a comprehensive and intensive package. And the reason we put our price point up front is we like to make sure that we have the right fit for the type of individuals we attract in terms of our service. And this is not a basic tax prep. What we're really going to do is show you a full picture of your financial profile of all the type of income that you receive, whether it's a W-2, 1099, K-1, and really put up the right plan for you. Not just a yearly plan, but a quarterly plan. And one thing I want you guys to understand, what we're going to do is make sure that you have the right retirement plan also. And lastly, whether your situation is complicated or simple, what we do is that we'll guide you to make sure that you have the right strategy in place. Every month I take a limited number of physicians to review, and honestly, this work is done by me. It's not done by my junior associate. When the month is full, the link closes, And ideally, we don't want somebody else to fill up your slot that you need. And also, in terms of our complimentary review, what we do is we like to review the tax returns of our potential clients to make sure that they're guided correctly. This is not a sales pitch. This is not a gimmick. We just want to make sure we're on the right page and we have clarity in terms of what we're looking to do. To really wrap this up, when you take a step back, as a medical professional, you spend decades becoming the best at what you can do. And the reality of this, you don't want the IRS to collect the difference. And I want you to really think about that. And in terms of what's next, in terms of our services, I want you guys to book a strategy call with us by clicking that link. And what you get is me going through your personal tax matters, understanding what's right for you. And what you get is making sure you have the right entity in place, whether it's taking the S-corp election, understanding whether the defined benefit plan is right for you or your family, also doing a year-end projections, and a written action plan in terms of our services. So what I want you to do is to click on this link, and also we'll take a look at your income, your structure, and what's available for you before December 31st. And also, if it's not a right fit, we'll tell you within the 10 minutes. This is not a sales pitch, but we want to make sure that you're working with the best, and also you receive the tax savings that you desire and what's available to you. Again, my name is Busayo Ogunsanya, and I look forward to hearing from you. Thank you, and have a good day.